Welcome all you real estate fiends out there. Today is April the 17th, 2022. Today is Easter Sunday. It's just about 10:30 p.m. here in downtown Toronto, and I'm going to give you your real estate fix. So let's just get started and dig right in. So in this video, as we always start, we're going to go over the condo downtown market report, and then I'm going to talk a little bit about the interest rate hikes that were done on the 13th. And also, as promised, I did make a calculator that does show you the effects of interest rates and your affordability and income, and so I'll go into that and geek out a bit on that as well. So let's get started with the downtown market report. So what you're looking at here is the active downtown sale listings for resale. I eliminated all the parking and locker, and I'm looking at the C1 and C8 district just to be technical. So if you look at it compared to the previous week, we're currently at 948 active listings in the downtown core right now. The previous week we were at 932. So we did see a small increase in the number of active listings this week. If you look at the number of condo unit sales for April, we're currently at 281. I did notice that a lot of the numbers have not been reported over the last couple of days during the long weekend. So we might see this number go up a lot higher in next week. But right now, if you compare it the previous month to this month, we're lagging quite a bit. I expect this maybe to come in at around 600, 700 sales for April. But it'll be interesting to see because there was quite a lot of things that happened in April, like the interest rates going up, the announcement of the federal budget, also the increase in the foreign buyer tax. Again, all of these things could have an effect on the number of sales that happened this month. It'll be interesting to see when we look back. The current downtown condo average price is $871,530. It did go down slightly for April so far, but as you know, I'm not a huge fan of looking at average prices, so we'll go to the HPI tool, the home price index, and we'll look at the benchmark price. So right now, the benchmark price for the C1 district from March is $862,900, and for C8 districts is $796,800. This will be updated again in May once they report April numbers, so it'll be interesting to see how this changes. As you can see, the graph has been pretty steep, so indicating that we've seen quick and fast appreciation. Typically that is followed by a downturn. So we'll see if that happens in April or not. Now, if you look at the median sales prices, some people like to use this measure besides the average sales price. So we're currently at $775,000. If you actually look at the list price sales price ratio, it is coming down. So basically, the amount of bidding wars that are happening, and the intensity of the bidding wars is decreasing, which is what I'm sensing in the market right now. So if this continues to come down, definitely we'll get into a more balanced market, but still, on average, 108% over the asking price, which is still a very good market. It could be that the strategy of the agents have not changed yet because they're still trying to price low and try to price for a bidding war. And a lot of the listings that I see on the market right now aren't accurately priced, and that is their intent. They're not actually intending to sell it at that price. They're just attracting people to come in and then turning around and saying we want a lot more money than our asking price. If you look at the number of days on market, right now it takes about 11 days to sell a condo, which is still a very, very good market, as you can see, and compared to the previous months. 11 days is one of the lowest records that we have since 2019. So now let's take a quick look at the rental market as well. The active listings currently in rental market is about 1608. It did come down from 1727. So as I said last weekend, we are seeing a downward trend in the amount of inventory in the downtown core for condos. So if this continues, you'll start seeing the prices going up. The number of condo units that were leased in April so far is 890 units. If you look at March, the previous month, we had 1956 leases. So I think we'll be pretty close to this number for April, because I am seeing that the rental market is very active. However, this weekend it's been extremely slow. I think people just enjoying the weather and getting some time off, but on our listings the phone calls have stopped. So it'll be interesting to see how next week comes along, and if it's still slow, you'll know next week, and I'll report it to you guys. If you look at the average rent prices, we're currently at $25.13, so it's holding steady. As you can see, for the past about 10 months, it's been relatively flat, the rental market. If you look at the median prices, it's gone up slightly by $50. So right now the median price for a condo downtown is $2,300. And if you look at the list price rent price ratio, it has actually gone up over 100% now. Last week I believe it was at 99.99%, so it's gone slightly above, indicating that most landlords are getting their asking price, or even slightly above it, in cases of competition. And the days on market has actually dropped as well in April, so we're currently at 19 days on market compared to 21 days the previous month. So the trend for the rental market is good for landlords. The inventory is going down, prices are starting to slowly go up, so it'll be interesting to see how we end up in April. Now I'm going to quickly go through the actual detailed numbers for you. So as I mentioned earlier, the average sales price in downtown is $871,530 right now. If you look at a studio, you're looking at about $538,000. One bedrooms are going for about $700,000. One bedroom dens are going for about $776,000 right now. Two bedrooms are just over $1 million now. The two bedroom dens have come down a little bit. Again, smaller sample size, but we're looking at about 1.285 for that as well. Okay, and I would ignore this number. Again, there's only 10 samples that we're taking this from, so you want a lot higher number to have more significant data. So I would ignore this number. If you look at the rental numbers now, again, we said the average rent price is $25.13 right now in downtown. A studio is going for about $1,788. One bedrooms are going for over $2,100 now. One bedroom dens are just about $2,350. Two bedrooms are going for just under $3,000, and two bedroom dens are going for about $3,500 a month. Now let's quickly talk about the interest rates. So on April the 13th, Bank of Canada had their meeting, and they actually increased their interest rate by 0.5%, which is quite significant. Typically they only raise it by 0.25%, but they really want to tackle inflation, so they did an aggressive move, and increased it by 0.5%. A lot of reports that I've been reading say that they're going to be doing this 2 more times this year. They want to get the overnight rate to 2% or even 2.5%. So we'll see how things change in the market as they start putting this policy into place. I believe the next Bank of Canada meeting is in June, early June. So we're going to see them. We'll see what happens at that time if they raise rates again. The chances that they will raise rates again seem to be quite high. So we'll see how that affects the market moving forward. So now to my calculator. So as promised in one of my previous videos, I wanted to see what kind of change the interest rates made to affordability. So I made a couple of different spreadsheets that we'll go through. So this one basically, shows you if you have a $100,000 mortgage, if you're at 1.5% interest rate, how much it changes as the interest rate goes up. So if you're at 1.5% variable rate, and then now since the rate's gone up to 2%, your cost has gone from just about $400 to about $423. And again, if you have $1 million mortgage, your cost is now from $4,000 to $4,238. Again, I put the percentage changes here as well, just to kind of give you an indication on how that changes. So if you're at a 1.5% and then all of a sudden you're at a 2%, it's costing you about 6% more for your mortgage. I also made this chart here just to show you the difference. Say you're at a 2% interest rate and now you're at 2.5%. So your change is you're paying 5.84% more. If it goes up another 1%, as they do predict it's going to happen by the end of the year, your mortgage cost is going to basically go up by 18%. So that is quite significant. If your mortgage cost, one of your biggest expenses, does go up by 18% by the end of the year, definitely will have impact on the market. So in this chart here, what I'm showing you is I can put in any amount for your mortgage. So let's just say $500,000. It'll show you how much your monthly payment is based on that. And then here I can show you the difference in the dollar amount. So if it goes up a quarter percentage, you're paying about $60 more. If it goes up by 50.5%, you're paying about $120 more, which happened like this week actually. So, if you're on a variable rate mortgage, your interest rate increased by 0.5%. Now it's costing you $120 more. If they do increase it 2 more times, so you're going to be at about 3%, it's going to be costing you about $370 more a month to take care of your mortgage. And again, if your interest rate started at 2% and now you're at 2.5%, it's going to cost you $123 and so forth. This is kind of how you read this chart. In this chart, I basically, put down like a purchase price. So let's just say you want to buy like a $900,000 property. Then it's going to tell you how much income you must have in order to qualify for this mortgage. So before, when the fixed rate interest rate was around 3%, you would have needed a qualifying income about $155,000. Now that the interest rates are about 4% now, you're actually going to need about $164,000. So you're going to need about $10,000 more to qualify for your mortgage of $900,000. This is another calculator that I created. Again, this will basically tell you how much your qualifying income must be based on these criteria that I put in. So that'll give you a quick calculation of how much income you'll have to have in order to qualify for a certain purchase price. So if you play with these numbers, it'll adjust this number so that it'll tell you exactly what you need in order to qualify for a mortgage. So this is another calculator I made. So if you have an income of about $150,000 per year, it'll tell you what your purchase price can be based on the interest rate. So at 3%, if you're making $150,000 a year, you'd be paying about you'd be able to qualify for about $900,000. Now that the interest rate's at 4%, you just lost purchasing power of about $100,000. So I put the percentage here. So right now, people have lost about 10% of their purchasing power with the increase of interest rates, especially the fixed rate mortgage, going closer to 4% now. So it'll be interesting to see how the prices adjust and change, and if it actually does match this, because all things equal with no other variables in play, this is technically what should happen as the interest rates go up. The affordability will come down and the prices should adjust according to that level. But again, this never happens in real life. It's going to be interesting to see how things play out. I just wanted to create this calculator to kind of show you what happens to buyers when the interest rates go up and how it erodes their affordability. So hopefully this was interesting. Again, I haven't tested everything on the spreadsheet. It's still a work in progress. So as I polish this up over the next couple of weeks, we'll be able to play with this and I can answer a lot of questions If you have any specific questions in regards to specific numbers and things like that, like I'll be able to help you answer those questions as well. Just a quick disclaimer though, like this is not 100% accurate. You need to still talk to mortgage brokers or banks that will be able to get the numbers more accurate for you based on your unique situation. So this is just kind of a guideline as a quick, tool just to kind of play with the numbers and see what kind of changes will happen with the increase in interest rates. Don't take these numbers exact to the T. That's it for me for this week. I hope that was helpful. I hope that was interesting. Feel free to leave your comments below. I would love to hear from you guys and see what your thoughts are on what's going on with the market, how you see things changing, anything that we've talked about on the video. Be happy to discuss. And remember, if you're not in the real estate game already, it's one of the best things you can do for your life if done right. And that's what we're trying to do, teach you and help you do it right. Thanks for watching, and I'll see you in the next video.